Well, good morning, everybody, and welcome to CBI at 10. I'm Liz Mosley, I'm an editor and partner at Tortoise. Here with you today to talk about everybody's surely favourite day of the year, Tax Day. It is not a topic about which I am an expert, but I'm joined happily by a panel of people who really do know what they are talking about to pick through the announcements that came from the government yesterday that sort of signify a route forward, if you like, a sort of a signal of intent about future tax policy. And there's some interesting stuff for us to pick through and pick over. Before we get into the meat of the discussion about tax, I'd like to go to Rain Newton-Smith. Good morning, Rain. Nice to see you.
Morning.
And as we sort of typically do in these webinar sessions, before we go to our sort of chosen topic of the day, we kind of try and do a bit of a trot around any new or interesting or pertinent developments in relation to the sort of COVID pandemic in general that are important or affecting businesses. What do we need to know this week?
So I think for me, I'd probably just highlight two things that I think are particularly important, which sort of feed into the global travel task force and that all important question that I think is and it's great to see we've been joined by Dan as well this morning. That all important question about how and when we open up international travel and how we do that safely. And then the second part is really about workplace testing as well. I think that continues to be a lot of issues for our members. So on that first question about opening up international travel, it's so important for our wider economy, but really important we do that safely and really building on almost the gains we've made so far with the vaccine rollout and really tackling the virus and the pandemic here in the UK, and we submitted, the government have been consulting on this. We submitted in consultation with a huge range of our members some evidence to the government on that last Friday. It looks like from what we've seen from the reports in the media already, we know the government have committed to reporting back on that on the 12th of April. It's possible we might see some further announcements even as soon as the 5th of April, but it continues to be hugely important. And I think
sorry, I'm going to connect from another computer because my line's not too good. But back in a second.
Sorry, Dan, we're live already, so maybe just mute if you need to consult. Secondly, just looking to the bigger issue and the wider issue around sort of testing in workplaces. I think what we are picking up from members is there continues to be support for the government providing help on funding some of that testing in workplaces. And what we're seeing is there is a gradual increase in the uptaking in providing that testing in workplaces from 13% the last time we surveyed to around 22%. So it's still about around a fifth of all workplaces offering that testing. And I think one other element that's becoming important to businesses is the ability for individuals to do that testing at home. And I have to say, in the other room, I've got 3 tests already delivered from school for in the same way that parents are testing their secondary children at home. Being able to have that flexibility is quite important for that to be practical across many workplaces. So we're still picking up lots of intelligence on that. And then the other issues is the wider consultations around COVID secure workplaces, social distancing. And I think on that, we know it will still be a while before we have more information back from government on that, but we're still feeding in all that intelligence to government from some of the questions we're picking up from businesses. And I think one area where businesses are keen for a bit more clarity, particularly as we look ahead to next Monday, when that stay at home message changes to people are allowed to travel a bit more. What does that mean for working from home? At the moment, the guidance is work from home in where you can until June 21st. But I think there's a lot of questions in businesses' minds as to whether the practical guidance on that changes over the course of the coming weeks.
Rain, just on testing before we move on, because a regular theme on these sessions has been questions specifically relating to testing. 22% still sounds quite low. Is that 22% of all businesses or 22% of businesses that are currently open?
I think those are the 22% of the businesses that we surveyed. So
Okay.
my understanding is that is the sort of, group. It will be a combination both of CBI members, but also we go out more broadly to businesses across different sectors. So it will also reflect that, some businesses, the majority of their staff will still be working from home.
Because the deadline's the end of March, so that's very, very close now to get yourself set up. So even if you're not kind of in the next 3 months, after March, the shape of your business might look quite different. So you sort of, now is the time to get on top of it testing wise. Rain, thanks for that. I'd like to sort of do a bit of a handbrake turn / neat segue into the next phase of the conversation, which is really why we're here today. Yesterday was tax day. I was horrified when I got the brief for this morning because I thought, I don't even know what this is. A couple of days ago, I'd never heard of it, but I was reassured to discover that it's not just me who hadn't realised it'd been happening all these years. It was the first and inaugural tax day. Where did it come from? What is it? And just give us a sense of, what it delivered, what was promised. What's your reactions from a CBI perspective?
Well, I like to think that the government was just looking for something to sort of cheer us all up as we emerge from a global pandemic. So decided to offer us the gift of tax day. But no, I think really what it was about is often what happens on the budget. And look at the budget we just had. There was so much in there in terms of thinking about helping businesses through the COVID pandemic and some of that short-term business support, but also, setting up long-term institutions like the National Infrastructure Bank and Invest to Grow and R&D. So there was so much in the budget that there was a feeling like that actually it would be helpful if we separated some of the announcements where the government are looking to consult on the wider tax landscape. Let's move some of those consultations to a separate day, so we have a day where all the consultations that the government is planning to ask businesses, to ask stakeholders over the next 6 months are all released on one day. So
Okay.
I think in terms of planning, it was definitely a sensible thing to do. I think from our point of view, it wasn't as strategic as we would have liked. I think there are, and I know Janine and Dan and John, we will go on to sort of discuss some of the consultations that were out there. But I think what we were hoping for a bit more is that sort of broader strategic, where is the government's direction on the overall landscape for business taxation? And I think in particular, there were two big areas that were sort of missing for us. And first and foremost, that was thinking about the fundamental reform of business rates. The government did publish some of the consultation responses and a sort of summary of those that they've had in so far, but we still don't have an indication of how much the government will actually tackle business rates reform to regenerate our high streets, to think about the move to a low carbon economy and how we make our buildings more energy efficient. There's a huge role for business rates as part of that. And that brings me on to the second area where we still need to see more. There's some indications the government will look to it, but the whole thinking about how our tax system helps us make that move to a low carbon economy, and whether that's thinking about how we incentivize the take up of electric vehicles, how we help people install heat pumps in their homes to provide more renewable energy and how we heat our homes. Pretty much across the landscape, there's a role for a strategic look at the tax landscape to help us make that move to a low carbon economy. And I just don't think we saw enough of that, though there was welcome announcements on consultation around R&D, tax credit to think about data and innovation, which is something we've been calling for. But I think we're still missing some of that more strategic look at some of the long-term challenges the business community and we as a society are facing.
Okay, thanks so much, Rain. So kind of a good and understandable idea, but perhaps the first one a bit of a missed opportunity. I'm going to come now to Janine Juggins. Good morning, Janine. Thank you so much for making the time. You're here with us this morning in the context of being chair of the CBI's tax committee. We've heard a little bit from Rain about what wasn't there, but there was some stuff in there that is material and useful and interesting. I wonder if you wouldn't mind giving us a bit of a rat-a-tat-tat on the sort of big ticket items that we discovered yesterday.
Thanks very much, Liz. So there were 3 consultations that I think larger businesses are going to be particularly interested in. The first of those related to uncertain tax positions. This was something that the government consulted on last year, and it's very encouraging actually that they've listened to the feedback that was given and thought about this relaunch now of a much more targeted set of proposals. So I think one of the criticisms from the last consultation was that this was possibly an example of the sledgehammer to crack the nut, and it could be much more targeted at the issue that the government were really trying to address. So this is very positive. It's a new consultation, so businesses will be looking to input into that. The second one was around a consultation on providing more transfer pricing documentation. And whilst obviously taxpayers understand that that tax administrations and HMRC in particular need to understand transfer pricing positions, they need to be able to do risk assessments and to audit effectively and make efficient use of their resources. And again, I think this is one where businesses will be looking to input to make sure that that the responses are proportionate to the problem that HMRC are trying to address here. I think many large businesses in particular have an awful lot of related party business dealings, and they're exactly what would be covered by the transfer pricing documentation. So the extent of the detail that might be required to be provided is no small compliance exercise, and that's really, I think, where the focus of input is going to need to be. And then finally, the other thing that caught my eye was large corporations already have to make quarterly tax payments on account for corporation tax. But there's a consultation has been proposed to look at the timing of tax payments in other areas. So corporation tax for smaller businesses and also in the area of income tax. And here, one of the things to bear in mind, obviously, is that the timing of tax payments are quite material for most businesses, and that could have potentially a very significant impact on cash flow. And in lots of businesses, the timing of the receipt of income is not it doesn't accrue in the same way across the entire year. So if you end up being in profit in one quarter but in a loss in the next, then obviously you'll want to get some tax relief for those losses in terms of your payments on account as soon as possible, again to smooth out the cash flow impacts of that. So they were the ones that caught my attention.
Thanks very much, Janine. I should say, if you're watching the webinar this morning and you have specific questions while we have the experts in the room, then please do ask them. Now is the hour. They can be as specific and as technical as you like, or sort of more strategic and wide-ranging. Please you just post them in the questions field on the side. Just on those consultations, we heard the detail of the timeline of those, and I'm guessing there will be an opportunity for CBI members to sort of input into the CBI response to the consultations. Where can people go to find out the information about how to do that?
So in terms of inputting into the CBI responses, anyone in the CBI Secretariat can receive input, and obviously you can contact me directly as chair of the CBI Tax Committee. But we will be looking to put together CBI responses to these consultations, definitely.
Great. So don't be backward in coming forward if you're watching and you feel strongly, as somebody who used to run a small business, that profit in one quarter and loss in the next. I remember the feeling of that kind of way of trading. So I can see that there's some, like you say, some very material potential changes. John, I'm going to come to you now. But just before we started this morning, before we started live, you mentioned to me the sort of a variance in tone, perhaps, between the cover note and the content of what we received yesterday from the government. And I'm just interested to explore that a little bit. Just show us what you meant by that conflict. contradiction?
Yeah, sure. And I think it's really the vision that is being painted around the sort of modern tax administration, and in particular the use of digital and how that can help make the system easier. So we get a lot of the upfronts around looking forward, data sources being plugged straight into the system, help you make your tax payments, a simplified administration system. So on the face of it all sounds a much easier, simplified process for taxpayers. I think when you look a bit close to home about what does it mean in the short term, I think actually it's quite the opposite. And what Jean's just been talking about there are definitely going to be potentially quite significant additional compliance burden. So particularly around the transfer pricing, one point in there they particularly point out is maybe quite an extensive list of evidence and facts you'd need to compile into your report, which would be way beyond any other tax authority I'm aware of around the world. So I think there's this slight dichotomy between this vision that's been painted, this great sunny uplands of how life's going to be really easy and it's all going to do it itself, and the reality that actually, particularly for large business, I think the increasing burden of compliance is just getting bigger and bigger. And that's on top of all of the issues happening internationally with the OECD, where we could get lots more additional compliance through all of the OECD projects. So I think, to me, there was a slight discrepancy between the vision and the reality.
Does that relate in some way, John, to the review that was announced yesterday of the whole tax administration framework? Because like you say, I can absolutely buy into the vision of simpler, real-time, integrated, it's all going to be a great utopia, but my reality is somewhat different. And indeed, if I was running an enormous corporation, the like of which the CBI represents and Janine and you are part of, even your own tax administration is complicated, and you have different people looking after corporation tax and look after VAT and so on and so forth. What does it mean, that whole review of tax administration? How will it feel like?
Yes, I think there's and then the documents yesterday tries to bring this out. There's sort of two broad planks. There's one around the whole making tax digital and the use of technology and real-time reporting and data sources. And there's been a lot of consultation recently around making tax digital, particularly around corporation tax just before Christmas. Separately, though, there's the whole sort of legal framework that underpins the whole management of the tax system. So, what are your requirements around when do you have to file returns? How long does HMRC have to make inquiries about that? When you make payments, that whole sort of soup to nuts way of how you do your tax compliance. And the reality is that whole system has been, it's been layers upon layers of different changes and rules coming over the last 50 years. So I think the Tax Management Act is back in 1970, so that still exists. So I think the government's right that we were just talking about, it's a bit like when you do an acquisition of a business, you always try to integrate them to make sure you've got some efficiencies, and that's never happened from a tax administration perspective. So I think it's an admirable aim to sort of simplify it, but it's quite an ambitious project what they've set out in that tax administration framework.
Thanks very much, John. I'm going to come now to Dan. Good morning, Dan. I'm sorry we haven't spoken beforehand, so I'm totally flying blind. The floor is yours. Dan is sort of a tax specialist from Clifford Chance. Just give us a sense of your response to what we heard yesterday. We've heard obviously two big strategic things were missing around business rates and the green agenda, and then some specifics about how the government seems to be thinking about how it can accelerate the flow of tax to HMRC, arguably not necessarily with interests of business at heart. What's your sort of response in general to what we heard yesterday?
Well, I think I agree with everyone else that this was promoted as a great strategic day where there'd been massive announcements of huge significance, and it's not. There's nothing here that's strategic. What it is about tactics. HMRC remain focused on two things, I think. One is avoidance, which mainly these days, maybe predominantly these days, is not a business thing, certainly not a large business thing. It's about individuals often being taken advantage of by promoters, and a lot of this is about that. But also, as John said, there's a sense in which our tax system has grown up by years of additive legislative changes all being thrown into the corporate tax self-assessment regime, which kind of made sense. But now when HMRC want live information, it's really ill-suited to it. So we're gradually seeing a peeling away and individual elements going onto a different track. So we saw that with the diverted profits tax a few years ago. Now we're seeing it with transfer pricing, which looks like HMRC wants some kind of real-time automated reporting of cross-border transactions, which looks like a massive systems build exercise for large business. And then this notification of uncertain tax treatment, which I think CBI and others were successful in making it look more workable than it was originally. But there's still a serious proportionality question. I mean, this is a measure which HMRC reckon will raise 40 million quid a year. It applies to large businesses. There are, what, 8,000 large businesses? So that suggests that as a measure, this makes no sense if the cost for each business will on average be £5,000 or more, but they're bound to be £5,000 or more. How much, with all respect to John, how much decent tax advice do you get from a big four firm for £5,000? So just on its face, it's hard to see how this is proportionate. But given HMRC's aim of getting more information, getting information in a different way, particularly information that they might think is linked to avoidance, you can see why they've gone down that road.
Yeah, thank you very much, Dan. I can see that. Rain, I can see you making notes, and I wonder if I might put a question to you that's coming from Rebecca Pullen, who's watching. How do you think the IR35 changes due on 6th of April will impact the private sector, and is the sector prepared? Did we hear anything about IR35 yesterday?
So one of the things they announced is that they will be looking at some of the research that they have around some of the changes were brought in the public sector. So one of the big questions is, you know, what has been the impact of that, and that will give some sense of what the impact will be within the private sector. I think what we do know around IR35, and it's probably worth me pausing and explaining what that means. Some people who will know exactly what it's all about, but essentially it has to do with determining whether someone who works for you is whether they are sort of self-employed or whether we should treat them like as a worker or an employee. The sense being, if you are providing like the majority of your services to one single company, then really you are effectively like an employee of that company and should be paying the same amount in income tax and national insurance contribution as someone else who's an employee in that company. And I think the challenge has been, obviously you as an individual, you know what your working arrangements are, you know how many companies you're working for, whether you're working for only one company and over what period of time. But this is sort of shifting that burden of responsibility from the individual onto the companies themselves to make some of that determination. And I think that the challenge is for some companies, they don't always have all that information, or they're not prepared, you know, they don't have their system set up to have all that information on individuals. So I guess going back on the sort of history of this, I think over the medium term, I think people understand why the government is looking at this and why they are looking to make changes, but it's about the sort of pace of change. And we argued successfully when they were bringing this in that they needed to give the private sector more time to understand the rules and understand their obligations. And so that it was originally delayed for a period of time. Of course, the challenge, it was delayed until the period when we have now been facing a global pandemic. So I think the challenge for a lot of companies is this change has come in at the same time they've been dealing with a global pandemic. So look, is it still challenging for some companies? Yes, I think it is, though at the same time, you know, this change has been coming for a while, but it is something we still get a lot of inquiries from members, and we've really been feeding into government, particularly around the guidance for companies as to how they implement it, because it isn't straightforward by any means, and particularly not for smaller companies. It's a bit more challenging to go through, but I can see maybe Dan wants to add on that.
Dan, you used the old-fashioned way of waving your actual hand.
I'm an old-fashioned tax lawyer, Liz. So, I mean, this was, I think, one of the strategic opportunities which the government had and missed. What's the real cause of IR35? It's that someone who's an employee has a much higher burden of tax than someone who isn't an employee. And as long as you have that, you're going to have disputes on the boundary, some of which are genuine and some of which are caused by avoidance. You're going to have complexity. You're going to have a whole load of difficult admin hassle for the business. The answer to that is not to keep fiddling with how you draw the line and where the line is drawn. The answer is to step back and say, well, why do we have a difference between the taxation of employment income and the taxation of self-employment income? Why should a partner at a law firm pay less tax than an employee of a law firm? Why does that make any sense? Until government is brave enough to look at that question, which is, yeah, it's a difficult policy question, we're continually going to have every few years yet another IR35 style shake-up.
Ginny, you mentioned this a little bit as well, this reform of what you call the three-person problem. Were we expecting to hear a sort of grand statement, a consultation of how we fix that problem yesterday? Or is this something that just, there's a sort of feeling in the business community that's frustrated about, we've kind of accepted it will be ever thus?
No, I think that, as Dan said, I think it's more of a missed opportunity rather than we expected to see something a bit more fundamental. It is. I agree completely with him that we are dealing with changing where the lines are set rather than dealing with the fundamental issue. And if you think about a tax administration system that's fit for purpose in a modern way of doing business, you know, where methods of different ways that people work are very different, then the tax system needs to respond to that, and it should be supporting that change in business working rather than creating obstacles or compliance pressures, you know, because it hasn't been reformed. So I would support wholesale change, and I think it is a missed opportunity.
Thanks,
Janine. And I think, Liz, there has been some expectation built up. If you may remember when Chancellor announced the self-employment scheme way back, seems a lifetime ago now, about this time last year. Yeah, he flagged early then that, you know, the sort of price for this is going to be a review of national insurance in particular in terms of how it applies across. So I think, you know, there's legitimately an expectations being built up from that original announcement a year ago. So you know, I think it was surprising we didn't see anything in the budget, and you know, I think we would expect to see something in the next budget coming up.
John, we mentioned the tax gap before we started, and we've touched on a lot of things that sort of talk to that point, the gap between the tax that, according to all, if you do it by the book, the tax that is owed and versus the tax that is received. I don't know the sort of quantum of that is quoted or how it's calculated, but a lot of this feels to me, if I'm understanding what the panel is saying correctly, to do with not just closing the sort of the gap in terms of the amount, making that smaller, but also the speed with which the money flows from the ower to the recipient, to HMRC. What's your take on that? It doesn't feel very classic, we're the party of business kind of stuff.
Well, I think you know, the tax gap, I think it's about, well, based on HMRC calculations, and it's a bit of a, it's not an exact science, but it takes about 30 billion is the latest number, I think. And certainly, and I think Dan alluded to this, that yesterday was very much around an anti-avoidance agenda. And I think even the document, the consultations like the simplification, if you read through them, there was definitely a vein of closing the tax gap through all of the announcements yesterday. You know, and the government split out the tax gap between whether it's, you know, the hidden economy, errors, you know, offshore. So basically all of those announcements yesterday were trying to hit different component parts of that tax gap. So that was definitely a theme running right through yesterday. You know, lots of those are definitely required. So as Dan mentioned, some of the undesirable end of the market around promoters of some dubious schemes, you know, clearly things need to be done to stop that. I think as we also know, Treasury do a cash accounting, you know, unlike certainly Janine will do and everybody else does generally. Treasury does work on a cash accounting basis, so any acceleration of cash also is a good thing from an exchequer perspective. So when we talked earlier around bringing forward the payments, that is a one-off benefit that will come in the year when they do the transition, because they talk about there's two options. You either accelerate and people don't have to, businesses have a double tax 1 year. I think the alternative of giving them a year off is pretty unlikely, to be honest.
Thanks, John.
The tax gap's a funny old thing, though, because it contains different elements that really are wildly different. It includes criminal attacks on the tax system, people reclaiming VAT and then vanishing. But then, of the very small amount that's large business related, most of that is legal interpretation, as in a taxpayer says the result is X, HMRC say the result is Y. In my experience, those are very often cases where HMRC has it wrong. So knocking that together and seeing that as one problem with one set of solutions is the wrong way to look at it.
Yeah. Who would like to take this one? A question that's come in from the audience. I don't have the name of the person who's asked it. Do we think capital gains tax will be aligned with income tax rates? Who wants to have a crack at that? Don't all rush at once. Rain, go on. I'm afraid you've drawn the shots.
No, Liz. Look, I think I can give the sort of context from where it is related, but others may want to jump in with their sort of opinion. So the Office for Tax Simplification looked into some of these issues, and there is looking at the wider landscape around capital gains tax, which is taxed at a different rate to income taxation, and there are reasons for that. They represent different things. There's different risks associated with capital than there are with sort of income. So I think there are definitely reasons why you would have differential tax rates, and it's a bit different, I would argue, from what the issue Dan was pointing out more recently about whether you're, what classes you as an employee when people may be doing very similar jobs, but that it is that income you're getting is very similar and playing a similar role, and I think that's why people do argue there is a case for better alignment. I think it's a bit more complex around capital and income, so it's something I think the Office for Tax Simplification looked at. They published a report. They don't opine on policy. That's one for the government to address. So but I'll leave it to others to sort of give their opinions as to whether they think the government will tackle this. And of course, it's what do we mean, which element of it, because there's a huge range of income that is received in through capital.
Jimmy,
I guess.
go on. Sorry, John's gone.
Sorry. I was too quick there, wasn't I? I could have got away with that one. I guess a couple of things. I think the OTS are actually halfway through their review, so it was in 2 stages. So I think they've got stage 2 due, I think, in a couple of months. So personally, I certainly didn't expect anything yesterday on capital gains tax. That was no surprise. I think I agree with everything that Rain says as well. I'd be surprised if we get a complete alignment. We may get some sort of some changes at the edges around exemptions and stuff like that, but I think we did see in the budget, if we believe the numbers that are talked about in the budget, there doesn't seem to be quite the compelling public finance requirement. If you believe that, then maybe there isn't that pressure to do something. So I'm going to regret saying this, but I'd be surprised if we get an alignment, but I wouldn't be surprised if we get some changes to some of around the fringes.
The personal allowance is surely marked for death, isn't it? Given it costs over 10 billion a year.
Say again, Dan. Sorry, I missed the beginning.
The personal allowance, everyone gets an annual CGT free allowance of what, 12 and a bit thousand. Eliminating that would raise over 10 billion of revenue for the government comparatively painlessly. So that seems perhaps the most likely change.
Interesting. The big sort of the big question, if I bring my sort of tortoise journalist hat, is obviously to do with how you're what you're suggesting there, John, which is how do we pay back what we've borrowed? Who's going to pay the bill for COVID is the big question. We talk about it a lot. Members bring all manner of wild and wonderful suggestions of how to do that. One very popular one is, well, if all the big tech companies just paid the tax that they should pay, then we can all go, that helps us all. I just like to know whether that is or isn't a sort of what is that a valid way of generating huge amounts of money? Because my sort of feeling is the counter argument is corporation tax is never going to give you a big enough slice of the pie, even if Amazon did stump up what they owe or whatever. How do we handle that sort of very commonly expressed by members of the general public opinion about corporation tax? Rain?
So look, I think the very short answer is no. Even if you were able to, and it was, you know, the right thing to do, and even would bring in the tax revenue you would want, you're never, you know, I think the companies and the size of companies, I think that people have in their sights, they're thinking about the very large digital players, and actually the issue there around their tax contribution is often a question about where should they be paying their tax. Is it in the US? Is it in the UK? This is actually a, you know, a debate between countries as to where should the proportion that they pay on their profits, where do you apportion those profits? And actually, if we just step back and think about it, corporation tax is only 6% of our overall tax receipts. And then obviously the amount that the very large digital companies that people have in their minds about, you know, is a smaller proportion of that, because, you know, the vast majority of corporation tax comes from a huge range of businesses, from retailers to financial services to manufacturers, you name it. And so and I think what we have seen the government commit to is already increasing corporation tax very significantly in 2 years' time. So, and of course, that will absolutely touch any company who is making profits at that stage, including, you know, large tech companies. And I think the real challenge as well is if you try to design a tax system to try and target, you know, individual companies, you have all these unintended consequences. We want across the macroeconomy more companies to be more digital. We know we have a challenge around digital adoption in the UK. We want to, you know, some of our smaller businesses to be able to make it easy to become more digital, and so I think that's where you have to be really careful about using tax as a lever for, you know, dare I say, wider, you know, political ends. I think we want a tax system that's fair, that's sustainable, and that works for a whole range of companies.
Thanks, Ren. I'm going to come to, there's questions coming thick and fast in the last 6 minutes, as is often the way. I'm just going to ask two back to back, because they kind of relate to the question, which is one from Dominic Curran. Do the panel think that the government will progress towards an online sales tax in the autumn? And then another from Henry Bridge. Any thoughts on the EU's digital levy and the potential for something similar here in the UK? Janine, are those a couple you might like to have a crack at?
Yeah, well, maybe if I can pick up the one on the digital levy. So this is connected to what Rain was just talking about. So the proposal on the the UK's proposal on the digital services tax is absolutely a response to pushing for change in the international tax system to allocate the profits differently of those types of businesses and bring more taxable income into the UK. The challenge, which I think is being referred to on the digital levy, is that the EU is also looking at introducing a digital levy. And I think the key difference here is because many countries within the EU have already implemented some type of digital services tax, as the UK has done. But this digital levy proposal that they're now looking at would actually go sit on top of any digital services taxes that may get repealed once international agreement is reached. So in other words, even if you got an international agreement on the allocation of profits, you may still end up in a situation in the EU where there's a digital levy that's collected on top. And this is part of their proposals to repay the 750 billion euros of bonds that the EU has issued to fund grants and reliefs because of COVID.
Okay, that's great. Thank you very much, Gina. I think, Dan, did you wave your hand and you were going to come in on something that Rain was talking about?
Yes, I mean, this digital levy proposal has the same fundamental problem of the employment point we were talking about earlier. that you're drawing a line, pretending you can draw a line between digital business and non-digital business, and then slapping essentially maybe a 2% VAT increase on digital business. That means you're going to have, first of all, a cost passed to consumers, just like VAT is. Second, you're going to have a lot of boundary disputes. What if I buy something from a shop and then it's posted to me later? What if I call the shop? What if I book over the internet from a shop, but then I pick it up from the shop? Which of those, if any, gets caught? Queue uncertainty, cost for business, confusion for consumers, and avoidance. It's a terrible solution, but politicians who feel that they must do something and this is something may end up doing this.
And actually, Liz, we're just to that very point around boundary challenges. We're going, I think, just coming back to yesterday, there was another paragraph around the residential property developers tax that's coming in. So, you know, this is on the back of the cladding catastrophe. So, you know, that's going to have exactly the same problems that Dan's talking about. Where do you draw the line in terms of who pays this new residential property developers tax? And we're aware Treasury are trying to get their head around how they draw a line on that one as well.
So, thanks so much to everybody this morning. It would seem to me, I hope this is a fair assessment, that there's a sort of a fair amount of frustration in a way, apart from the two big strategic misses that we talked about at the beginning. There were some welcome things in there. Sort of the drive for simplification would seem to be the right move, although, as we said at the beginning, and John in particular highlighted, the sort of actual tactics, the material tactics that we sort of got a feel of yesterday are in conflict with that. Rain, do you want to just give us a couple of closing comments in the last minute or so about what next? If I'm a CBI member and I'm just getting my head around what happened yesterday, what's the sort of timeline of things that I might look out for to be able to understand, A, can I contribute to a consultation? What do I think? And B, when might some of this stuff actually start to affect me in real life? What's the sort of general time frame of all this?
I think, sort of stepping back from most things, the timeline is the sort of consultation running over the next 6 months. Each one has a kind of their own individual timetables. But I would say, look, if you're a business and you're or an individual who have views on this, who think you might be affected, then do get in touch if you want to feed into our responses to those consultations, either to myself or Janine and others who lead our tax committee. And then the other thing, I think the other thing to hold in our heads is, obviously in the autumn we'll see a budget where some of this, we'll see some of the responses in a way to those consultations, but not all. Some of this is, is plans over the course of the Parliament. But I think for us, the two big things we're looking out for, and definitely need to see more action rather than just consultation, is absolutely around business rates reform and that wider piece where we know the UK is really uncompetitive, big impact on our retailers, manufacturers, and kind of across the piece. And the second bit is that move to low carbon economy. We need to have a tax system that really helps and is pulling in the same direction to deliver that. And that's those are our two big pieces of homework, I think, for us and for the government over the next 6 months.
Brilliant. Thank you very much, Rain. Thank you very much to all of our panel, to John, Janine, and to Dan. For next Monday, it will be an update on Brexit, in particular trade and services. We're looking at mobility, we're looking at data sharing, we're looking at qualifications. So do, if you can, make time for that. 10 o'clock on Monday. Thank you very much. As I always say, put the kettle on, take 5 minutes before you go and open your emails. Have a good day. Thanks very much, everybody. Bye-bye.